Our global event risk radar has identified the top 5 market-moving events and themes that we believe will impact markets as we start the new year. On the first risk of the year, we've already seen oil prices spike higher, with the tensions between the US and Iran escalate, and this has had an impact on markets more broadly, with safe havens briefly spiking higher too, with gold prices rising and risk assets underperforming. Now, going forward, it's about how this will impact the supply and demand dynamics of oil markets that will feed through to the broader theme at hand. We have the OPEC decision in March. After recently agreeing to continuing their production cuts, do they roll them over? Or does the recent rise in oil prices lead to the end of those production cuts by OPEC? It will be important to watch how the US sanctions play out too. While sanctions are already on Iran and have recently been raised to new levels, it's whether this also spreads to Iraq and how that could impact oil markets there. The second risk of the year is probably the biggest one when it comes to broader markets, which is the weakness in the growth data has started to have better signs of a pickup, what we call green shoots, with new orders rising and survey data implying that the worst of the manufacturing slowdown is over. But what if these green shoots actually turn out to be a macro head fake? Does the green shoots that we've seen slow down, and does the official hard data, the industrial productions and retail sales, fail to match what the surveys imply? Now, the damage is already done in some cases. The low growth of last year for many economies has led to central banks putting words into action. The ECB cut interest rates and expanded upon quantitative easing once again. The Bank of England is in the spotlight, with Mark Carney on his way out and Andrew Bailey on his way in. But could the Bank of England cut rates towards the end of the month, or indeed this year? The risks are more balanced thanks to these green shoots, but like I said, it's a matter of how far these green shoots go. Whilst the ECB is unlikely to cut rates in the short term, if those green shoots were to turn down, their strategy view could see the ECB look for lower for even longer when it comes to interest rates towards the end of this year. Other central banks, such as the Reserve Bank of Australia and the RBNZ in New Zealand, are also looking to ease policy further this coming February in our view. The third risk of the year is, of course, the US presidential election. Whilst the election is in November, the risks may be more front-loaded as to who the choice is of the Democratic candidate. The primaries for that process start from around the beginning of February, but most of the risk could be on what we call Super Tuesday, which is on the 3rd of March, where around 35% of the delegates will be allocated to who they want to be the candidate. An early lead will make it easier for that candidate to race ahead in what could be a very important choice for their candidate. Does the Democratic Party choose a far left of centre candidate or a more market-friendly centrist? This creates potential for the US presidential election to be market-moving towards the second half of this year. Whilst 2019 was all about parliamentary battles when it comes to the UK, our fourth risk, of course, is those Brexit talks into this year. Parliament will be less of a battle for the Prime Minister with a much larger majority. So it's now more about how the talks go with the EU instead. We've already seen some early indications of how those talks will go, and it's about whether the UK will give up its leverage over certain sectors to achieve benefits in others. The big decision will be, of course, whether to extend the transition. The narrative sounds like the UK will decide not to do such a thing. But if time is short, and if the UK is facing a cliff edge towards the end of this year, a hard decision might need to be made whether to extend the transition period or not. The fifth and final risk, of course, is what's going on in Europe when it comes to the politics. There are tensions in the German coalition, there's the outcome of what just happened in the Spanish election, of course, and whether the Italian coalition is sustainable or not. That may come to a head after this month's regional elections. But more broadly, it's a refreshed EU Commission of last year and how their reform agenda may play out that could move markets, especially when it comes to banking reform and the Green New Deal. When it comes to banking, does the European project lead to a EU-wide deposit insurance scheme? Do we start to see mergers become much easier for European banks, such as the treatment of NPLs and also less harsh and restrictive capital requirements? Those are just 5 that we can highlight. There could be, of course, many other unknowns. Whilst it's a new year and a new decade, it means new risks. the world economy is on shaky foundations. It remains critical for investors to be vigilant to the many risks at play.